Hi, everybody. Welcome back. It's the Misfit Happy Hour brought to you by Sanglucci and Charlie, who runs Sanglucci. Today we have Ronch and Cypher with us. A quick recap of the day. We had S&P still trading around 4,100. The crude seems to have not found any sellers, up at 123. So it's still there. Record high national average for gasoline. Bitcoin continues to go nowhere. The bonds are sitting around 137. It's a week away from expiration. And so today was pretty quiet. So you probably are wondering what we're doing to kill the time. Today we have one of the original hosts, Ronch, is with us, which is great, and a friend of his named Cypher. So without further ado, Cypher has something that he uses called harmonics.
Yes.
And that's probably some secret stuff. So maybe he'll give us a quick
Jedi Temple shit.
Yeah, a quick rundown. Does it have anything to do with astrology? No disrespect intended.
No, not at all. Not at all. Not at all. It's not as crazy as it sounds, to be honest with you.
Okay. Is it a fractality kind of thing where it's like the flea on the flea of the flea?
It works on any time frame, and basically what it does is, at first, harmonics you can't trade by itself. You know, it combines market structure, it combines supply and demand areas as well. So what basically happens is you have a beginning point and you have an ending point on a chart, right? Price wise. And what happens is you use Fibonacci ratios, and for your starting points and your end points and your middle points, and you inevitably get down to a final point, right? Where you could then enter a trade and execute a trade to buy. So it kind of gives you the parameters of where price is going.
I don't mean to interrupt you. Did you count tree rings as a kid?
And count what?
Tree rings. You know, when they saw a tree and on the stump, you could count tree rings. They say that's a fib ratio.
Ah, yeah. Well, isn't your shoulder and your head and your arm like 61.8 or something like that?
Probably right. Yeah,
I heard something about that.
Yeah, like we kind of somehow fit together, like your hand fits, your palm fits your heel or something.
Yes.
Right?
Well, basically harmonics, there's like 6 or 7 harmonic patterns, which, you know, you could find on the internet, but they really don't explain really, you know, people think that harmonics is just basically, okay, you know, it's some type of weird thing. But basically, as I've evolved as a harmonic trader, you know, it's very important to use it with supply and demand, right? It's very important to use it maybe with anchor VWAP, right? You might have an area where you have VWAP hitting where a harmonic ends. So this is the kind of validity that you use when you trade harmonic patterns. As a matter of fact, for what you guys do with the tape reading, it's especially very effective, because when you get to a final deep endpoint on your harmonic, you'll see the tape change, right? You'll most likely see the bid pick up, or, you know, the sell pick up right at, you know, depending on, you know, where the endpoint of the pattern is.
Who was your teacher?
I was self-taught. A lot of my teaching came from Forex guys, currency guys. They're big into this. They were the ones that introduced me to it. And, you know, it takes time to develop, you know, it really takes time to develop and learn it. But once you learn it, the beauty of the harmonics is that it's all based on your eyes. I can tell the ratios. I could tell I could see a harmonic pattern just looking at a chart. And that was always my goal, because, you know, I've been a trader who struggled, right, before I started, you know, learning this. And one of the things I never did was use my eyes. I never looked at a chart and, you know, use my eyes to see what was going on, right? It was just basically being told that this is a great spot to buy, or a great spot to, you know, go short.
If somebody wanted to learn about harmonics, where would they go?
You know, there's really not a lot of places to go. No, I'm being honest. It's not that
I appreciate it, right? Yeah, that's the question.
I mean,
right?
If you go on YouTube and you type harmonic, you know, you'll find Scott Carney. He was the guy that He has this software that he puts out, but you know what? It's hard. It's hard when somebody just tells you to do something, looking at it, you know, rather than knowing why, right?
So for everybody listening, including myself and maybe Ron, what is it based upon?
It's based upon Fibonacci ratios. So for example, you might have a move up, right? Let's say you have an impulse move, right?
Right.
Price goes from $50 to $100, right? That's your impulse move. Price comes in, right? If it comes in 50% of that move, you have, right? You have a potential pattern. That 50% move, right? And then counter move will give you an endpoint. It's hard to really explain without showing you.
In other words, is it you're using either a measured move or Elliott wave sort of?
No Elliott wave. No Elliott wave. It's you have an
Oh, I get it. Is it a measured move predicated on Fibonacci extensions and things of that nature?
Yes. So for
right.
example, if you have an impulse move from 0 to 100, right?
Mhm.
Let's say a stock came out, impractical, went from 0 to 100. It pulls back to $50, right? So your fib ratio on that pullback is 50%, right?
Mhm.
So what happens is then it makes another counter trend move, right? Off of $50 to $75,
Well,
right?
wait a minute. Primary trend is higher. So
Right.
actually the first drop is the counter trend move. So it's resuming its upward trend.
Okay, very fair. Right, very fair. That becomes then another leg of the harmonic. So what happens is once that harmonic comes back and breaks $50, there's rules of where price will go.
Sure.
So for example, that would be called a bat pattern. It has a
Right.
50% retracement. You're looking for 886 of the original from 0 to 100. So it would go to $14, the price.
Have you heard of the strat? There's all these sort of short-term price patterns called the strat, which seems to be a lot of the way the rings, and in fact, the way that you're describing trade.
Yeah.
And so, and as also GAN stuff said that the universe was divided by 8. And then Carolyn, of course, Carolyn Baroden, right? She has her whole fib empire out there.
Yeah.
Is there anybody that you subscribe to in the way of a newsletter now?
No. I basically trade on my own.
And have you taught anybody your harmonics?
People come to me for training, and I do train people if if they're willing to really put the effort into it. Yeah.
Are they still your friends?
Yeah, Chris, they are, because I'm still sitting here.
Yeah,
right.
There was, back in the day, we knew Cypher as PFD in the Steamroom, and for a long time we'd share ideas, etc. And then one day, he said, hey, I'm going and I'm learning this other stuff, and he kind of went out on his own and learned these harmonics, and then he came back and he showed me some of the stuff, and I was like, I'm just too stupid to learn this stuff. There's so many moving parts for me to keep track of. And what's interesting though, is when you guys talk about retracements. So some of the things that I look for that line up with what Cypher's looking for are things like, when you see an algorithm driven move that fills a gap, right? Well, what happens a lot of times is that type of move will retrace 50%. That's a Fibonacci, right? That's a Fibonacci type of trade setup. So, you kind of use some of this stuff without even knowing you're actually using it.
Cypher, so I'd like to congratulate you on your sense of curiosity in regards to going and doing something new. And what would you tell the people out there who are kind of looking to always be moving forward? What would you tell them about the starting process of choosing something? I mean, you had to choose among many options. What would you tell the people listening? What's the thought process when you're looking? Curiosity is a good thing, and you're going to go find something new. What would you tell them to look for?
Well, in terms of the harmonics, or
in terms of some people want to go study Elliott wave, some people want to study GAN, some people want to study harmonics, some people want to study fib, some people want to study tape, right?
I would say that the most important element of even harmonics or even Fibonacci is market structure. I think that a lot of people are not do not know how to use market structure, and do not know how to look at pivot points where there might be supply or demand, right? Areas. And I think when you apply, when you could see a chart that way, then you could open up your mind to see the chart in many different ways with harmonics, or you know what I mean? You have
Uh-huh.
to, there's really like even today. So even today with ES today, so I was watching the 4135 level. It's a 15-minute level, market structure level. So in the morning, it dipped below it, and then price went all the way back up to 4160, right? That break of that structure was a signal that they were going to sell any pop into that 41, because 4165 has been a very, very hot area in the futures. And right from there, it reversed,
So,
right? Simply because market structure broke right in the morning was a signal.
it seems as though the key aspect for developing a new trait, or for people going to investigate, in your case, harmonics, what you're saying is structure. So
it's one of the ways that, because a lot of traders, they work, they do other things. It's very hard for them to take the time to learn,
what other things would reflect structure? Like volume profile, right? Might reflect structure.
Volume profile is very, very effective with value areas. The point of control is a little bit more devious in terms of how the institutions use it for manipulation, because everybody's looking at the point of control.
Mm-hmm.
So anything that they give you is something that's going to be there to throw you off, similar
Right.
to trend lines.
Right.
Trend
If it's free on the edge.
If it's free, they're just playing with you.
Right.
And when I hit a value area high or a value area low that hits a harmonic buy point, that's like even better. That's where, because the institutions are using the harmonics in their buying and selling. You just don't know it.
You sound
Think
like
about it.
you sound like a conspircy theorist right
No,
now.
I'm not. I'm not. It's just money. It's
How else are you gonna make money?
Right? Yeah. Was Oswald alone?
Listen, why do you think you can't find this stuff anywhere? It's because they don't want you to know about it. They really don't want you to know about it.
Hey, Ronch, what do you use for structure? I mean, everybody knows that we all can read tape, right? And we have some years of experience in reading tape. So
I mean, I use a combination of things. I'm lazy. I use my eyes, right? So
yeah.
I'm looking left for areas that repeat. I'm looking for 30-minute closing bars that have, that are areas where you're seeing, crash or pop. Those are ways and areas to focus on to look for change, right? That's kind of how I've been trained to look for change, is finding spots like that.
I have learned
change, and that change that you talk about, Ranch, is usually a very big pivot point on the harmonic pattern. So basically, when you break that market structure, that point then becomes the linchpin. After the fake move higher, then they drop it right back below that market structure that broke, and then that's where, using ratios and stuff like that, you find your buy point. But actually, it's actually even simpler than that, because typically that endpoint where it drops and it breaks that market structure comes simply into a supply and demand zone, which will be a Fibonacci ratio.
So we've been on here for 10 minutes and we have no idea what harmonics is. We absolutely have. We have no idea where to find information on it.
You can find information on YouTube.
Okay, we have no idea what it is. Right? Is it a curve? Is it a line? Is it a mathematical count?
It's a drawing, actually. It's a schematic. It's basically it's basically a schematic of, how you have a Wyckoff accumulation or distribution schematic. Think of a harmonic as just basically drawing triangles and stuff like that. It's very simple. It's simple, but it's a little complicated. It's not hard at all. It's not hard at all to learn, to be honest with you. If I could learn it, Anybody can learn.
Right?
There's nothing special about me. I just spent a lot of time just studying it, making all the mistakes. But it's not what, when I trade, I don't say, oh, I got a harmonic and I trade. The harmonic works 1,000%, but it lines up with everything that I'm looking for.
Cypher, sorry to interrupt. What doesn't work then? Let's just start out with what doesn't work.
What doesn't work is when you get harmonics extend when volatility occurs, right? So when the market is calm, right, your buy point stays solid, right? Because you maintain structure in the market, right? And it's a lot easier to trade. That's when the volatility comes in. Harmonics can have patterns that can extend, right? So you break structure and volatility goes up to 30, right? So you're looking, where is this going to end? Where is the low point going to be? That's where, you know, you have to have a little bit more advanced knowledge of looking for bottoms, right?
Is there anything that you plan on learning after harmonics?
No, I'm done. I'm pretty much set in what I do.
If it works, right?
Yeah, no, I mean, I make a living off it, a pretty good living, and you know, so I'm you know.
So that's it. That's you're like a shoemaker, right? You're just going to make shoes.
Yeah, I mean, but you know, one of the things I've always wanted to do is, you know, be able to I'm glad that you guys gave me the time to discuss it. I know it seems vague and it seems Star Warish and things like that, but you know, if someone goes online and looks it up, you'll get a good idea of what it is, and it's just basically Fibonacci ratios and you know, structure. You know, that's basically what it's really not voodoo. It's really not out of this world stuff. It's I took a trade on Netflix yesterday straight off of a harmonic, and you know, it was a pretty simple trade, which would have dealt with you know, supply and demand, right? It came right into a supply and demand zone, and it was a quick $5 move. All I need is one trade a day. You know, I don't bounce around, trade 5,000, you know, things. You know, you focus on a couple of setups that you like, and you go from there.
I think it's interesting too, Chris, that when all of us talk about these things, we all use these different methods, and all of us kind of wind up in the same general spot, but we just use different vehicles to get there. You know, as far as trade execution, we seem to be arriving at similar spots, but just using different methods to get there.
And that's what a lot of people my friends that I give advice to, and you know, sometimes they hit me up during the day. That's the same exact thing. You know, when they see things and I see the harmonic ending right where they see it as well, it's basically, you know, that's it, you know. So I know Ronchero uses a lot of things. He uses anchor VWAP. You know, you could use moving averages. You know, moving averages work fine, you know, on the daily and stuff like that. A lot of times you see a harmonic end right on a 20 SMA, or, you know, or rejection right at a 200 SMA, you know. But harmonics is rules based. It's not something that is, I make up a thing and I want to see it that way. It's rules based. Okay, it's more rules based than any speculation that you're going to find.
Yeah, we're not questioning you. You don't.
No, I'm just trying to explain it.
Right, we're not the prosecutors, and you're not the defense, right? The idea is we have all these people listening who are maybe getting curious about harmonics, but we don't really understand.
Gotcha.
And you know, you use TradingView, right?
I use TradingView. Yeah, the ease of you could use any platform, Ronchero.
And can people still follow you? Do you still publish what your ideas and thoughts are? Do you still put stuff out there like that?
I used to. When I used to try to market myself a little bit, but what happened was, you know, you get a lot of questions. You know, you get a lot of people that really didn't understand it, and you know, if it extended a little bit further, you might hear from. So I really didn't want to put anything out that would be influencing people unless they really were comfortable with it and knew it. So
Gotcha. Okay.
that's kind of, and even on with my YouTube channel, I try to post a lot of stuff, but a lot of times, you know, people aren't willing to put in, you know, the effort to learn it. You know what I mean? Because
Just
they're
give me the
fixed
trade
in their
free.
ways. Yeah.
Well,
Just tell
timeout,
me where I can
Cypher.
make it.
Cypher, timeout. I just asked you if you're willing to learn something new, and you said no, you were done. So just right back at you. You just said no, you're not willing to. So you can't complain about other people not being willing to learn when you yourself just said you were not willing to learn.
True. That's why I love. I could listen to him anytime on.
You know. So how long? Hey, how long have you been at the game?
About 10 years.
And
10
then,
years.
where are you currently located?
I'm located in New York, in Rockland County. Yeah.
Oh, right. Yeah.
You're
Right
in
up the
Manhattan,
street.
right?
Yeah. I'm sitting right next to the World Trade Center. Right. A
Gotcha.
beautiful day anyway today.
Yeah, really nice.
And then Ronch is out west. Let's shift gears a little bit, at least away from you know, our way. Essentially, harmonics is just a way of segmenting data, right? Which is essentially what we're all doing. So the key for most any of us is finding a way that you can segment data in a way that fits your either risk tolerances or your time tolerances or both, so that the idea is that you're trying to get in step with an organic process that's out of your control, right? Where you have to dance with the market. And these are all just multiple different ways of dancing, or dancing with who brought you, so to speak. And so it's important for all of us to understand that the process of segmenting data is a way of essentially trying to get in step with the market, which is an organic process.
Right.
Ronch and Cypher and I all have different ways. And so we could pick it apart as to, from a philosophical perspective, but I don't know enough about harmonics to take them apart, and I don't think Ronch does either. So what we can do is let's play a quick round of what do you see happening after the Fed raises rates next week. Ed,
Well, I'm sorry.
Go ahead.
Okay. Well, the harmonics point to either a move higher or a move lower. Okay.
Did you really just say that?
I did. No, I'm being honest. I'm being honest.
Of course you are. That's definitely honest.
I know, profound, right? I know. No, what I basically mean is there's patterns that are, you know how a wedge forms in
Yes, we all know how a wedge forms. Yes.
Right. So right now we're in the middle of a consolidation.
Right. We all see that, right? We've gone sideways now for a couple of days.
We're going sideways between 4,050 and 4,200.
Right.
So if we get below 4,040,
right,
that area, we could easily see, 3,900, 3,950 area.
Okay, pick a direction.
The market does want to go higher. I do believe the market wants to go higher. The question is, which way, which direction? See, as a harmonic trader, I'm prepared to. I
get it, right? Like I would answer that question myself, just myself. I would say, look, the market wants to go higher, like you say, but the asymmetric payoff is to the downside because so few people expect a big downside move, right? So the puts are cheap, but the market does not seem to want to accommodate the put buyers at this point. Ronch, what do you think?
I think we're going lower.
Mm-hmm.
I think we take out the 380 area, and I think we're going to 350 is where I think we're going to wind up.
Yeah, you're right with Morgan Stanley, and that guy's been Mike Wilson, and he's been.
Oh, I didn't. Is that where they said we're going? 350?
3,400, right?
Oh, okay.
That's very interesting because one harmonic pattern that's set up on the weekly, using 4,030 as the starting point, there is a pattern to 3,550, which would hit right at your 350 area for sure. The 4030 area on the ES is very, very important.
Do you have any, Ron, do you have any feel for crude?
How can it sustain this level? So I actually would be happy looking for shorts in oil but I can't just say this is the spot. I want to find some shorts in oil, but I don't think this is necessarily the right timing, but I want to short it. I don't see how this sustains.
Right, that high prices shut off demand at a certain point. But in the case of oil or in gasoline and things and diesel, right? At what point do you? How's a simple question? At what point do you go to the gas station and you won't fill up because the price is too high? I don't think
$10 gas. I paid $7.15 a gallon the other day.
Right. I mean, and you paid, right? So you're still a buyer, right?
Yeah, absolutely. I mean, you kind of have to be. If
right.
Somebody, you got milk's got to go to the store, and what does it cost to fill up that truck to haul the milk to that store? Like,
right.
I don't know what the answer is other than at some point, like you're talking about, I think there's got to be, something's got to give. I just don't know what it is.
Yeah, it's interesting, right? Inflation eventually leads to demand destruction, which leads to deflation.
Yeah.
Right, which is super strange. Cypher, do you have a feel on crude at all?
I've been trying to get into an XOM short.
You want to short it too.
I finally today there was a little bit of a crack in XOM on on the chart. So I feel that when oil collapses, it's going to take out in one candle. It's going to take out 7 trading days. That's what I foresee happening.
But currently you're flat.
Yes.
Right, Ronch, you're flat. I'm flat.
No,
but
I'm long SPY puts. I'm long SPY. I'm long.
Oh no, I mean in regards to crude.
Oh, sorry. In regards to crude, correct. But I want to short it, but I am flat. Correct.
I mean, right. So the trend is higher in crude, right? So any short has to be a quick trade. It can't be
correct.
Right. You can't be staking. How many people tried to call the top for a decade and as the S&P went higher?
No, you can't. That's not reasonable.
Right.
It's not reasonable. Just like it's not reasonable to say the bottom is in the current environment.
Right. Any thoughts on the dollar?
Oof.
Because I figure they got the Fed is easing almost, right? The Fed is like, inflation will be Friday, it'll be 8%. And what's the Fed funds rate? Right. So I mean the Fed is still wicked.
I think rates are gonna go lower. I think the 10-year is going to fail hard. I think that's
a call.
Yeah, I think it's in the chart. I see the current pullback to over 3%. I see it as I do see it breaking. Yes, more than oil for sure.
Ron, do you have a feel there?
I'm on the other side. I think they keep raising rates.
Yeah.
I think they're going to keep raising rates. And then, somebody in the chat here mentioned that there's a lot of catalyst and there is catalyst that's coming. The question is what happens off of the, I would rather trade reaction than I would try to forecast. I can just tell you what my thoughts are, right? Like, Quad Witch, FOMC, first Fed quarter with bond auction on Thursday. Like there's a ton of stuff that's going to come out that's going to continue to keep the volatility going. I just think big picture wise that rates are going up and the market's going to look for another place to settle lower.
Yeah, I agree. I think one thing that we haven't talked about is I think there's going to be a real big volatility spike coming. That I can pretty much guarantee.
In what product are you speaking
Just overall, just the market in itself.
Well, what would you describe the past 3 months? Oh my God.
Oh, well, we've abated for the last
3 days, for the last 3 days, right?
No, I think longer. I think since we've been hanging in this area, we've been kind of steady. So I think there's going to be another, something's going to happen.
Well, I mean,
thank you. Right.
You think like VIX 85 is possible?
You remember Ronch when we were looking at TVIX and it went from $48 to $1,000?
Yep.
That was crazy.
That was the pandemic.
Yeah, that was the pandemic. But I think that's how you're gonna get your lower. It's going to be we're gonna get another wave of volatility.
I'm going to take the other side of that trade. I'm going to say that, the market could go lower, but the VIX is going to remain stable. Or, I mean, when the market goes lower, I don't expect the VIX to explode. And
are we ever going to see a VIX in the low teens again, or are those days done?
Well, it would have to be the failure of the dollar. And then all of a sudden the fail, and I agree with, I think it's Martin. Yeah, Martin's like the dollar's going to roll. I'm with Martin. I think the dollar rolls. But then the question is do the powers that be still keep a lid on the price of silver and gold? I mean, obviously they've destroyed that whole younger generation's crypto dreams. So, you know, so what do we know, right? We know that the central banks will keep a lid on volatility. They may allow the stocks to go lower to supposedly somehow drive down inflation. Certainly cool the housing market, right? Lower stocks cools the housing market, right? Higher rates certainly cooled the mortgage market.
Yeah, those applications are at their lowest levels in a decade. Is that what I read or headlined? Is that right?
Right. You know, the only thing, the fly in the ointment for the bears is that the midterms are coming, right? And that Biden's approval rates are so low. Here's Mr. Conspiracy Theory, right?
Well, it's the economy, right? The presidency is won on the economy. So what does that tell you for the next election cycle?
Right, which means if you have $5 gas, how can you have lower stocks? I mean, that means that's stagflation, right? That means the current administration is toast.
Yeah.
Right. So they're going to do everything they can. You see, like the yen, right? The yen is going to zero. That's just more easy money. Where's that money? That money's probably finding a home in oversold tech stocks. I'm guessing. I don't know.
Are the tech stocks oversold at this point?
I guess as Steve Hammer says, they're overextended to the downside, not oversold. That's the wrong term these days. They're smashed. Look at ARK, right? Like we were talking to Jay, and I was like, Jay, what do you tell somebody who's long ARK from the highs?
That they were asleep.
It's like, I'm sorry, right? Like, what do you say at a funeral? It's like, you know, it won't always be this bad.
Yeah, it's that's a typical investor or retail investor mindset though, right? Like it'll be better tomorrow. It'll be better tomorrow. It'll be better tomorrow. And it's not better.
How do you, hey, Ronch, how do you explain the over enthusiasm to the upside when they get going lately? And it seems to be like a 1 or 2 day wonder.
I think people still are not able to process or understand because they may not have seen it. They may have only been traders for the last 10 years, but they don't know what it's like to be in a rising rate environment and trying to trade in a rising rate environment. And you have a number of things that are continuing to tell you that any pops that happen are likely to be met with pushes back down. It doesn't mean the pops can't last for 4, 5, 10 days, but they're not, if you can't recapture or get back to the highs, what do you think is going to happen? And how far are we from the highs right now?
It makes me think that this monoculture of dip buyers is going to be with us for a long time.
Well, somebody's got to donate money to us. I don't know what else to say.
Right? Like, so Cypher, you've been in the game 10 years, you said?
Yes.
So in other words, if you were a hypothetical money manager with your experience, you would have been successful, right? And successful social behavior is contagious, right? So you would have been successful buying dips for the last 10 years.
That's all it was.
Right. And you would have never, ever, ever done anything to ever trade the short side because you just waited for, what was it, a 3 or 4, 5% dip, maybe if you were lucky. And so my question was back to Ronch, was that you see this sort of over enthusiasm on the buy spikes. We get like 100 handle rallies lately these past couple of weeks, right, Ronch?
Yeah.
And so I'm like, you know, so to me, I'm like, oh, I get it now. It's Cypher's generation who never knew how to trade a down market, but they know how to buy a dip, and we've had a hell of a dip. So they're coming at it as though it's some sort of validation of their whole confirmation bias, or their validation of the only way that they know how to trade is to buy them.
It's really not even that bad, because where are we at on the S&P 500, where prices are only back to, right now we're back to April of 2021. Like, that's really not that bad. In April of 2021, you weren't feeling that bad about where your portfolio was had you been investing that whole time. But now all of a sudden the world is about to end. Like, I don't think we've seen real pain yet. That's why I think that there still could be more pain. That's why I say that.
Yeah, I mean, it's a complete, I mean, Morgan Stanley is not a small shop, right? They share that same view. And so what you're dealing with then is a completely shifted situation in Washington, you know. And so, yeah, as we know, the people in power make a lot of money, so they're going to try and stay in power.
Yeah, I agree.
So, yeah, it's interesting. Cypher, any thoughts?
In terms of price action, or in terms
Yeah,
of,
I mean, between your no disrespect, your generation's tendency to buy the dip, and that's the only way.
I just wonder how many people are around that lost 90% on some of these stocks.
Yeah, that's true. Where are they?
Well, you're not going to hear about it.
Where are they? I mean,
You're not going to hear about it. People don't go around and talk about their losses ever, right? They just go away.
Yeah, I mean, I don't know where they go for capital. I mean, you just get wiped out. I mean, some of these names that was so popular, I mean, they just have been getting destroyed.
Same with some of the altcoins. Also, Solana, getting destroyed.
Yeah, Shop is a great example. What was that? $1,800. It's now about 400, 350, 380, 390 today. That's really struggling. And what happens when I think that's where a lot of the short-term volatility is occurring in some of these downgrades that these own companies are forecasting lower margins. When does Apple come out after hours and say, hey, you know what, we're having trouble? Who's paying $1,300 for an iPhone now? I don't know.
It would have to be after the end of the end of the quarter here at the end of June.
When does Amazon say our sales are, Target did it, Walmart did it? When does Amazon or Shop come out and say our numbers are down?
When gas hits $6.
Yeah.
Or $7. Oh, by the way, on the Cypher on the Merritt Parkway, I saw a picture today. It's of gas for $6.25.
Oh yeah.
Up there. What's it by you? Yeah.
By me, it's super is $6.50 and regular is $5.40. That's crazy.
Yeah. So our sympathies to everybody who's watching, who's driving a lot. I'm sure that will change things.
It will.
Diesel's even worse. Diesel is even worse.
I guess it's bullish sweaters for the New England people because heating oil is essentially diesel. I mean, Ronch, what's the strategy these days? What is the strategy? It's,
So I continue to trade short term and am trading ranges, and all I'm trying to do is continue to stack cash. At some point, this will all end, and when it does, there will be quality on sale, and I will buy quality on sale for longer term, and I will, it's rinse and repeat. Because if it doesn't find a way to bottom and start moving higher, then we're going to be in a different situation, right? Then you're talking about things like recession moving to what you're talking about, stagflation, or even depression, right? Like I'm not forecasting depression. I'm saying if it doesn't recover, then maybe that's what we're going through. So my mindset has always been, in times like this, to just collect cash on these short-term moves and stack it and wait for something that is of quality that I don't have to do a ton of homework on, and then pile into that. It's not any more complicated.
Sticking to your knitting is certainly, and then cutting expenses at home, of course, is important. And, trying to live a more minimalistic lifestyle, it's almost as though you could say the volatility in the markets is basically telling us that the degree of possible range of outcomes and from the economy from a macro sense is so wide, is so great. We're having 2.5% days. That must mean that there's the potential future outcomes for all of us are greater than we've ever experienced.
If you can trade the ranges, yes. And you can trade the ranges usually 2 or 3 times at a minimum through the course of a day. And if you are if you're somebody who can, like all three of us, look for market structure and places and areas where it makes sense to put on risk, then you can do well.
Have you changed your strategies, either of you, in getting out of losers? I'm getting out of losers. I'm not waiting for a pullback if I'm short, and I'm buying them back when I'm wrong. Are you averaging or waiting or anything, Ronch or Cypher?
I'm entering at levels, and when I enter at those levels, if my trades don't work quickly, I cut them for little or no loss, and then I look for the next spot to try it again.
Right. You have that sort of military perspective, like you're defending the high ground.
Kind of.
And if you get overrun, you just look for more high ground.
Yeah.
To defend.
Exactly.
Right.
Yes.
Which is George Kaufman, right? He ran TNS and Spirit Leads. Cypher, any sort of strategy?
Same thing that Ronchero said. I mean, as far as my short-term trading, my short-term account, I'm pretty much cash at the end of every night. I trade the day. Everybody that I know that I work with, we trade during the day. I tell everybody to, now's not the time. Now is not the time to go long in anything. There's no indication that we have that signal. As far as my longs, which I keep separately, I sell calls against them. And, sometimes I'll buy actually put if I see that short term, there's going to be a move down. So that I'm not averaging in by buying anything, lowering, increasing my quantity. But what I am doing is I'm lowering my overall cost. So this is a great time to do that. And if you know pricing and market, if you know where the levels are, and that's basically what everything is levels. You can trade those levels, even with your longs that are hurting. I know a lot of people that are in AFRM, that are trying to manage their way out of it using being
That's
in at
brutal.
$75-$80.
That's brutal.
It's brutal.
Where is it now?
It's at $25, $23.
Just from 176 down to $23, right? That's, if you were in that, oh my God.
Yeah. I mean, you're talking about a painful thing. And I know a few people that just believed in it. And, but that's everywhere, right? I mean, that's pretty much everywhere. But my strategy is if I'm in, all mine are big names. I'm in the big guys for my long accounts. And, Facebook, I picked up at 185.
But Cypher, we're trying to help the people listening. Have you ever heard the expression, every trade a story? We used to say that on the floor all the time. Every trade a story.
Yeah. Okay.
So literally every trade a story. So what would you tell the people who are out there who are wondering, what is the harmonic view? The harmonic view says that you're nimble. The harmonic view says it can go up or down. Right?
Yes.
And so therefore, if
the
something
says that overall the trend is down.
Okay.
So we every pop is being sold
right.
On the longer time frame. And with that being the case, we're looking for downside pressure. That's what we're looking for.
And that's as clean a statement as we can hope for in this world of right. What do we know, right? We know people are long higher, right? So that's going to provide us with some sort of resistance. I guess at Ronch, where do people get out? They get out at break even, right? When they're wrong.
Are you talking about in what time frame of trading? Are you talking about just like?
I mean, generally speaking, like if we're wrong, right? Even when we're using this HFT alert stuff, and when they're wrong, they get out at break even, right?
Yeah,
and so it's probably safe to assume that when people are wrong, they're happy to get out at break even, right?
Yes.
Right. So if we're looking to enter shorts, given Cypher's and everybody's the long-term averages are down, we are assuming that we're in a downtrend, then we're just looking for places where we think that a lot of people have purchased something, and now that would function as a roof.
So people want to get out and break even is your double top.
Or right. Well, you would initiate into right. You would as a trader, if you were looking to sell them in the context of a rally in a downtrend, you would like to look to enter those trades where you view other people have prior long side inventory that it would now be breaking even, and that would mean that you would probably find some should we say, sympathy as a seller there.
Yeah, and I think if you look at spots like where we're at right now, you talked about consolidation. My belief is we're still in a downtrend. So to me, this is a good area to put on risk for a downside move, which is why I told you I'm in June or July 410s, right?
Yeah.
So I put my money where my thesis is. And if I'm wrong, I'm wrong. But I've got time, and I need that time because, you know, you're chopping sideways, and once it finishes chopping sideways, I believe it will resolve to the downside. So that's why I'm in that trade.
Ronch, you're at the 200 day in the VIX right here.
Oh yeah.
Okay.
So I mean, it's not like you're overpaying for the VIX,
right?
No, not at all.
Here, and you know, but then don't forget, the conspiracy people want the midterms to go good, so they're going to do everything they can. Cypher, where quickly tell people, I want to know to go how. I'm just going to type in harmonics into Google.
Yeah, you could even put it into YouTube. You can put in harmonic trading patterns.
Okay.
And you will come up with many things. I do have some videos posted on my YouTube channel. It's Cypher. And so, you know, you can definitely learn a lot on some of the videos that I've posted. And there is PDFs and things like that if you go on Google and you search with Google.
Oh, cool. All right. Who was the creator of it?
The creator of it was Scott Carney, 2 T's, CARNEY. And I think he has a website, harmonictrading.com maybe. And
So,
he's selling software through TradingView, Thinkorswim, and other platforms where it'll find the patterns for you and have watch lists for you. He's created a dashboard. He's created many things. And you know, a lot of people ask me, is it something worth purchasing? You know, you'd have to check yourself and see if that's kind of, you know, what works for you.
You know, that's so good. That's so good of you to go out and try and learn something new and actually do it and then make money off of it, right? So there's a lesson for everybody out there who's doing their one thing their way, is it is possible to teach us old dogs new tricks. Pardon the cliche. Gentlemen, 5 o'clock. It's a nice day, Cypher, out there. Let's get outside. We don't have.
That's right.
It's a beautiful day here.
Thank you for having me.
Cypher, thanks for coming on.
I wish I was able to explain it a little bit better. You know, I apologize, but you know, I can't show you on the screen or anything like that. You know.
No, it's good for people that are out there that are listening that want to explore it a little bit more. They know that they can go press some buttons and investigate it. So I think that's good that you gave them a resource to go check it out if they want to do that.
You know, right. It's a testament to the fact that there are other things that work, and we're not here. None of us are pitching anything. We have nothing for sale.
Yep.
So
it's definitely something. It's just definitely another thing that you could put in your arsenal. And if you really want to learn how to look at charts and stuff like that, it really works well with that. It really does.
And let us know if it works for you. We're curious, right?
Yeah.
Come visit us in New York. Cypher and I will take you out. So
yeah, I would like to get to New York again for sure.
Yeah, now's the time. Thank you everybody for coming, and we'll see you at the next Misfits.
Thanks, guys.
Thank you so much.
Later.
Later.